Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's January 17th. We're back. So hopefully you guys were able to enjoy a nice long weekend here, catch some of the playoff games here. We got kind of a lighter day today. We just got one economic news release scheduled for today, and that is the Empire State Index. This is a manufacturing data that comes out of the New York region. Anything above 0 is considered expansion. Anything below, of course, is contraction. So our previous reporting back in December came in at 7.6, and it fell back a little bit down to about 6.5 in January. So still in positive territory, but something, of course, we want to keep an eye on. So let's jump over to the headline news. The stock market's down. It's not so much on the the manufacturers not taking too much of a big thing on their. We got earnings reports, but again, that's not really. We got a lot of comments that were made over the weekend. So some comments made by regarding the Brexit from Theresa May, the Prime Minister, over there, basically again reiterating. Because she said this before, reiterating that this could be more or less a full exit versus a half in, half out type of exit from the European community. So that kind of again kind of reminded the markets that we're approaching that time period. And then also there were some comments made by Donald Trump regards to the strength of the dollar, that the dollar is a little too strong, that it's not good to have the dollar too strong. Which he's right. It's not too good to have it too strong, as it can, which kind of also leads into another comment that Fed Studley made. He made a comment about inflation, that there's it's not out of control, that there's no issue in terms of inflation. So as you'll see coming up, that will help out the bond market as well. But in relation to the Trump comment, with what he kind of led, was that a stronger dollar kind of gives corporations limited use, it limits them from being able to raise prices when they need to. So unfortunately, when the dollar's weaker, they're able to, of course, it's easier for them to raise prices as such. So let's go ahead and take a look here at the bond market. Now, as we said, Friday was kind of not so good day. We did crash a bit here, but today we started the day up higher, which is a good sign here. But we are right in between very, very tight resistance here. We got the 10-day moving average here, and we got the 50-day moving average here with that first resistance level. We're right in between that. And we're getting this star effect, and it's going to basically mean that we're going to be pushed one direction or the other direction. It's hard to say. It's been hard to keep above this level here, and we could get pushed down lower. So be very cautious coming forward here as to if you got interest rates floating out there, like if you're buying a home and you haven't locked in yet, or if you're looking to refinance, you may want to keep your finger on the trigger right now. Now, I could say go ahead and float a little bit, but be prepared to lock quickly, as it could quickly drop the opposite direction. All right, folks. So right today, interest rates are better than where we left off on Friday, which is obviously good news for a lot of us in the industry. And if you guys want continuing updates throughout the day, just come over to Twitter. I do post throughout the day on Twitter. I can be found at Mike Bjork on Twitter, and hit follow, and you'll get the daily updates throughout the day. All right, folks. Hope you guys have a wonderful day. I hope you guys want to say thank you for watching, and we look forward to seeing you guys tomorrow. Take care. Bye-bye.